Welcome to the Lend Academy podcast, episode number 97. This is your host, Peter Renton, founder of Lend Academy. Today on the show, I'm delighted to welcome Yihan Fang. She is the CEO of Yirendai. Yirendai is a Chinese platform, Chinese marketplace lending platform. It's been around for quite a few years. Before I go any further, I should also say that I own a small position. I own the equity of Yirendai because they are traded on the New York Stock Exchange under the ticker YRD. So I wanted to get that out of the way. I first met Yihan back at the very first Lendit event in New York, where we noticed we had a small number of Chinese people who had made the trek to New York for our very first event. We did no marketing in China whatsoever, but they came to us and we started a conversation, and they have been instrumental in putting China on the map here in the United States. And obviously they had the first IPO of a Chinese marketplace lending platform that happened. So in this show, we dig into Yirendai, we dig into who their borrowers are, who their investors are, what's their business model, and what's coming down the track. Hope you enjoy the show. Welcome to the podcast, Yihan.
Hi, Peter. Thanks for having me.
Okay, so Let's get started and give the listeners a little bit of background about yourself and particularly what you did before you came to CreditEase.
All right. Yeah, before I start, I want to point out I'm a big fan, the loyal listener of your podcast.
Oh, thank you.
I'm really happy to be here today.
That's good to hear.
Yeah, I joined CreditEase about 6 years ago. After meeting our founder and the CEO, Mr. Lin Tang, in New York. Before that, I was in New York area for some years, studying and then working in internet companies on product management. I was in charge of web products for Ask.com for some years. Ask.com is currently a IAC company.
Mm-hmm. Okay. And then what did you do? What made you decide to come work at CreditEase then?
Yeah, actually, when I met Ning in New York in 2011, I was not thinking of joining a financial company. I've been in New York for so many years and have a lot of friends on Wall Street, but never thought I would enter the space. So I was actually trying to start some internet, startup companies. And I know Ning was an angel investor, so I was talking to him about my project. And then on the dinner table, he was lobbying me on, his thing in China. So I got quite interested. So I went. First, I joined as an advisor, but then, became a formal employee of CreditEase.
Okay. And so CreditEase obviously has been around for quite some time, over 10 years now. And Yirendai, it looks like it was created shortly after you joined CreditEase. Can you tell us about the process of why Yirendai was started, why it wasn't part of CreditEase, why CreditEase decided to spin it off?
Yeah. When I joined CreditEase, actually I was an advisor for going online for CreditEase. At that time, CreditEase was running for about 5 years, and Ning always had the vision that this business peer-to-peer lending needs to go online. Mm-hmm. But in China, it's very challenging. So he said, why don't you take a look and see what we can do to bring this peer-to-peer lending online? And at that time, actually, in China, there was no internet. In China, we call the Fintech internet finance. Mm-hmm. And there was no internet finance, and there's no Fintech, this word, right, in the U.S. either. So we were just trying to bring the business online. And, it was developing, and now here we are. So when we first developing Yirendai inside CreditEase, like other new businesses in CreditEase, it was always operated quite independently,
right,
and with more of the internet company culture. Mm-hmm. After a few years, we grew to a stage where, business looked quite good. So in 2014, we spun off from CreditEase.
Okay. So the difference being that Yirendai is totally online. It's 100% online. Is that correct?
Yes, exactly.
Okay. Okay. So then many people who've been to Lendit, who listen to Lendit Academy, also know Mr. Ning, and he's quite, he's spoken at Lendit. I know he's very famous inside China as well. He's obviously the CEO of CreditEase. Does he have a role at Yirendai as well?
Ning actually is the board chairman of Yirendai.
Okay.
He works closely with our management team on key strategic discussions.
Okay. Okay, that sounds good. So then I know that CreditEase now has obviously gone far beyond just a peer-to-peer lending platform. I know there's many different divisions and businesses like wealth management and that kind of thing. So can you maybe just tell the listeners a little bit about what CreditEase does today, all the different pieces of it? Let's just start off with that. What does CreditEase actually do today?
Yeah, sure. Yeah, today CreditEase actually covers a broad range of financial services. On the financing side, it provides services to consumers, small business, real estate, auto. It also has a leasing business. On the investor side, CreditEase Wealth Management provides wealth management, and they just started asset management last year, and they provide services to high net worth individuals. CreditEase also has CreditEase Fintech Investment Fund, which is a venture fund investing in growth stage fintech companies in China and globally. It also has a credit fund called the CreditEase Offshore Private Credit Fund. It focuses on high quality private credits, including consumer and SME loans. Mm-hmm. And recently, they just invested in some U.S. lenders. As you mentioned, CreditEase is both online and offline. It has over 40,000 employees, including over 20,000 loan officers in branch offices and over 4,000 financial advisors. So it reaches customers using both online and offline ways. We call it high tech and high touch.
Right. Right, and that's something that's very different, I think, to the model in China than the model in the US. Whereas, mm-hmm. none of the new fintech companies have that many employees, and none of them actually have physical or branches, or very very hardly any, I would say. So that's a difference. So you have 20,000 loan officers, you just said. So they operate in cities all over China, and they their whole focus is sitting down face to face with the borrower, and obviously making sure they are who they say they are, and doing verification and all that sort of thing. So I just want to find out, so how does Yirendai sort of plug in there? Does Yirendai, you said Yirendai is 100% online, does it find all of the borrowers online as well as the investors, or is it using some of these CreditEase and the fact that they can find all these borrowers offline and then bringing them online there? Can you explain how it works?
Mm-hmm. Yeah, Yirendai is an end-to-end online platform. We focus on personal unsecured lending for urban salary workers. The reason we choose urban salary workers, this segmentation, is actually because, first, these people have huge needs that are not satisfied by existing financial solutions. Mm-hmm. Their credit quality is in general pretty good. And very importantly, they use internet a lot. So we're able to collect some of their data online. Mm-hmm. So when we started it, really the credit infrastructure was not there, and we had to use a lot of alternative data we collect online, and that's where our innovation really started. We built the first end-to-end lending mobile app in China, mm-hmm. and currently it's the biggest in China. And we also was the first one to extensively use online data for risk management, and we were able to provide loan product within minutes.
Right.
Yeah.
Right. So today, are you getting, what percentage of your borrowers come through the app? Is it 100%, or is it, what percentage would you say?
Yeah. Yeah. In terms of customers, actually, we have multiple ways to source customers. So our app is the biggest source. So for online acquisition, we actually have three major parts. One is the partnership. We partnership with other mobile apps, such as apps where people manage their personal finance, mm-hmm. Where people search for loans. and some consumer verticals, consumption scenarios as well. And the second biggest way is the online advertising, such as like search and app downloads, app distribution channels, which is big in China. Also, native ads become very big too.
Mm-hmm.
Yeah, and thirdly, we leverage credit offline sales networks as well. Currently, about 43% of the borrowers are sourced from the credit offline sales network.
Okay, so you'll take them, so credit will find the borrower, they will verify and do the information offline, then they'll pass you the information, and then you can place it online and the investors can invest that way. So I see. That makes sense.
Yeah.
So then, can you, like you said, these are urban people typically, they're not very well served right now. So can you just give us a sense of the typical loan terms, like the size of the loan, the rate, the length of the loan, that sort of thing?
Yeah, average size would be around 60,000 RMB with 2 to 3 years of tenure. And we have a risk-based pricing system, which gives floor prices currently ranging from 18% to 30+% APR.
Okay. So the lowest is 18%, is that what you said?
Yes.
Okay.
Yeah.
And then, so 60,000 RMB, what's that, about $9,000 or thereabouts?
Yep.
Yeah. So it's not that much smaller than the typical borrowers over here.
Let me describe a typical borrower.
That would be helpful.
Our borrowers is typically a young working professional, a few years into work, between like 25 to 35, mostly guys. And we require them to have some credit history, for example, a credit card.
Mm-hmm.
Yeah, so these loans are actually relatively big capital needs, such as like wedding, home remodeling, where there's no way for such a borrower to get enough funding from other financial institutions, especially, unsecured loans.
Right.
Yeah, so currently we have these 4 rates. And most borrowers are the highest APR because the costs are quite high, including customer acquisition and risk management.
How competitive is it? Are you, like, someone's going to pay 18%, or said most of them are paying more than 30%. Do they? Why do they come to Yirendai? And they're now, obviously we all hear about how competitive the Chinese market is. What is it that's unique to Yirendai that attracts these people to your platform?
Yeah, actually, online lending has become like more, a lot more players entered this space, I think, since 2014. But if you look at most online lenders, one type is like, for example, Ant Finance and Tencent. They're actually tapping into more of the bank customers, which is on the lower APR, maybe 18% or lower. So they're, I think currently at least they're more competing with the banks. And most of the other P2P online platforms are actually doing shorter tenure and smaller loans with higher APR, higher than ours. I think the Yirendai, with all these years of experience, because our loans are bigger, so we look at very deep data. Yeah, we collect a lot of data, and our models are quite complicated comparing to other new online lenders, because other new online lenders, majority of them serve customers who borrow like a few thousand RMB for a few months. To a new player, it's easier for them to verify their risk models and improve in a shorter period of time. And most of their borrowers, I believe, don't have credit cards. But we target customers who have credit cards, but whose credit card limits are not enough. I'll give an example. For example, one of our customers, he had a wedding in Hainan with about 100,000, RMB cost, but he swiped his credit card, and there was no way for him to borrow money from banks without collateral. and he makes about 8,000 RMB per month as a subway security worker. So that's our typical customer.
Mm-hmm. Got it. Right. That makes sense. So you've kind of isolated a section of the market that hasn't been and continues to not be all that well served. So I want to just switch over to the other side of the marketplace and talk about the investors, because I know that this is you still, in China there's a huge number of investors that many of the platforms have. So can you just talk about who are the typical investors that are funding these loans?
Yeah, we target online mass affluent. So we define as investable asset from 600,000 to 6 million RMB. So our typical investor is about 40 years of age, both male and female, and they are familiar with mobile phone payment, online transactions.
Mm-hmm. Okay. So then, how much typically do they put on the platform? Is there an average investor size?
Yes, that's a very good question. Actually, we pay close attention to our investor quality. Currently, we have about 200,000 investors that are currently investing on our platform, and our AUM, asset under management, per investor is over 80,000 RMB, and it's increasing because investors tend to repeat and add more funds once they like us, and we really target on like mass affluent instead of everybody.
Right. Okay. And do you offer these people like a target return? I know there's been a lot of talk in China about guaranteed returns. So what do you offer the investors? What do you tell them before they sign up that they can expect when it comes to returns?
Yeah, what we offer to the investors actually is a tool. So when we first developed the website, we actually offer the individual loans. But when there are so many loans, it's actually hard for anyone to manage. So we developed an automatic tool for an investor to automatically pick loans and reinvest from every month repayment. And we give a lockup period for each investor based on their needs. For example, in 12 months, after 12 months, we'll give you opportunity to exit if there are new investors to take over. So from the investor side, it looks like, simple like portfolio management. For example, if I want to invest 100,000 RMB for 12 months, and this tool would do the job. But of course, if there are not new investors to take over, he will have to hold the loans until maturity. So currently, more than 90% of our investors choose this tool, and we offer on average for 12 months about 7.5% in return.
Okay, so then what is the model then for you? Because obviously the pure marketplaces here in the US, they make a borrower origination fee, they make a service fee on the investors if the ones that are doing retail investment, and that's the extent. I mean, what is the revenue model then for Yirendai? Are you making money on the borrowers and on the investors? Can you explain that for us?
Yeah, we actually charge transaction fee from borrowers and management fee from investors by providing the tool. Yeah, those are our two major revenue sources, and we also will have new revenue sources.
Sure. So I'm just trying to get a sense. Then you said you set like 7.5% return to the investors for your for the tool that you use, and you said that 18% borrower interest rate that has like say a 3% default rate. Where's the rest of that spread going? Is that going to Yirendai? I mean, I'm just trying to work out how the economics all work.
Yeah, so the costs are, our major costs are, one is the customer acquisition for both borrowers and lenders, and altogether is about 8 to 9% for customer acquisition.
Okay.
Yeah, and also we have, currently we have a risk protection fund, which is about 7% of each loan. And so the funding cost actually the 7.5%, is also there, and then it's the operation cost. So currently our ROA is about 5%.
So I just want to you said something there about like this sort of provision fund, like they have this in the UK, where so you have 7% of the money goes into this protection fund. So is that in case someone defaults, the investor still gets their money, so and then this fund goes to support the investors. Is that correct?
Yes, that's how it works now. And because our investors are mostly individual investors, so there needs some protection there. So this is not like 100% guarantee. It's
Right.
responsibility from the platform, but we might improve the fund mechanism. We're currently working even with the regulators on a newer version of the protection.
Right. Okay. And do you work with institutional investors, or are you 100% retail?
Yeah, we are working with institutional investors. Actually, in 2015, we had a round of securitization of RMB 250 million. And last year, we had a round of private institutional investors through trust of 300 million.
Okay.
And currently, we're actively working with multiple banks, institution money, and there will be news coming out soon.
Okay, so then, what percentage do you think roughly of the borrowers that come is it that are being institutional versus the individual investor?
Yeah, currently, even the 300 million for this year is actually still a small portion of our scale.
Right.
So we are definitely, trying to test everything out and try to have more diversified funding sources.
Yep.
So going forward, I definitely expect, going a lot more, but I still think individual investors would be a major source in the coming few years.
Right. Okay. So I want to talk a little bit about your IPO. You IPO'd at the New York Stock Exchange. I guess it's well over a year ago now, 18 months ago, roughly. Why did you choose the NYSE instead of IPOing in Shanghai or Hong Kong or something like that?
Oh, that's a good question. Yeah, at that time we did think a lot. Yeah, but we thought first NASDAQ already listed lending club and on deck. And we think the U.S. stock market is actually more educated of marketplace lending. Also, Ning and a few other management members all have experience in the U.S., and we're actually somewhat more familiar and comfortable with the U.S. capital markets, and we think it is a good place to list.
Okay. And certainly it's done quite well for you compared to On Deck and Lending Club. You guys are doing phenomenally well based on your stock price as of recently anyway.
Thanks.
So I want to talk just a little bit about the state of marketplace lending in China. I mean, you had the CBRC came out with regulations about 6 or 8 months ago. Can you just tell us how the industry, what's the state of the industry? What's been the impact of these new regulations?
Yeah, the past 10 years of marketplace lending has evolved. We think from emerging, where it was more of land grabbing situation, to fast growing, where many players enter the space and wildly with almost no barrier, to now, which we think the industry is currently in an optimizing stage. The new regulations will definitely have a positive impact on consumer protection, which is super, super important because the customer sentiment has been not the best we want in the past 2 years due to some, scandals. At the same time, we also have an impact on a higher entry barrier for fintech companies to be in the space, which I think is a good and a necessary thing.
And then I need to ask you a little bit about the fraud that gets reported from time to time. And it seems like it's been a while since we've had anything significant in China, but there's a lot of people that I talk to kind of dismiss China a little bit, and they say, oh, there's too much fraud there. What do you obviously you're talking to US investors, you have your analyst calls for your quarterly calls now. I mean, what do you tell people about the fraud that has happened in China?
Yeah, there are actually two types of fraud. One is like a fraud platform, which is really, really bad. And the other one is like a fraud risk, which is also very big challenge in China for fintech companies. But this is actually normal in a country where there are huge demands, while credit infrastructure, regulation, and maybe some laws are not in place good enough. Yeah, so when we talk about to investors, we think really the market opportunity is quite different in China, and that's very important to understand. So in the US, the opportunity is more on a cost down or better customer experience solutions to make the existing system more better and more efficient. While in China, in addition to all these, the opportunities also include this big unmet and underserved demand. So that's very important to understand. And for marketplace lending, I think it's kind of leapfrogging, which is very similar to like mobile payment. While when we started late, but leapfrogged, I think more advanced than in the US. Now. Yeah,
I would agree with that. So, okay, before I let you go, I want to talk just a little bit about Lendit, which is now, I can't believe it's already 4 weeks ago, but you were on stage there at Lendit. You launched the Yirendai enabling platform. Can you explain what that is exactly? And is this really a strategic shift for Yirendai?
Yeah, sure. Yeah, Yirendai enabling platform is a platform where we share three things: data collection, anti-fraud intelligence, and online customer acquisition capabilities with our partners. So through this platform, we really want to address a few pain points for the industry. One is the really high fraud cost, as we mentioned, because Yirendai has quite a lot of experience in identifying fraud. We want to share with partners so that the fraudsters will have fewer places to attack and make money. Data collection is also similar, with the proprietary technologies to collect all different kinds of data. High quality data, credit models can be more accurate, and the approval rates can be higher, because currently, usually, at least for us, the approval rate is still on the low side, and it's not good experience for good customers. The other big pain point is very high cost for customer acquisition. In China, there's no good bureau data for marketing, and that makes targeted marketing very challenging. And for financial services, each company actually is serving a different segmentation. So Yirendai, we are currently the biggest online platform for our segmentation, and our app has about 100,000 new registered users every day. But unfortunately, we cannot serve all of them. It's not that they're not good, but they might be qualified for other products. So that's why I want to share the borrowers with other online lending platforms that have different products serving different segmentation, and the cost can be shared both for Yirendai and others.
So with the Yirendai enabling platform, are you going to be selling to other online lending platforms? And also, what about banks? Are you going to be selling this sort of all of your intelligence and to banks as well?
Yes, actually, we already got some attention from banks on both data and anti-fraud, as well as customers. We are actually serving customers slightly lower than banks. There are many other online platforms serving lower quality customers. So we really think all these together would result in a better customer experience, because currently customers have to pay high APR because of all these high costs for customer acquisition and the risk management. So we want to help the industry become better, and of course we'll be able to have some additional revenue stream. We think only if the industry is good, we can do a good business.
Yeah.
In terms of the shifting strategy, actually this is part of our partnership strategy. We're not shifting.
Okay. So what are you working on right now? I mean, what's next for Yirendai?
Yeah, market is still huge in China, and there are so many opportunities. But in the next few years, we want to focus on two areas. One is really to continue to have extended and healthy growth. We already set a target of 100 billion in 2020. This will include a lot of brand building work, optimizing our own products and the conversion and customer experience. And the big thing is the partnerships. Well, we want to partner with more consumer finance, industry solutions, banks, and deeper partnerships with big internet giants in China, as well as through the enabling platform to share the users. And the second area would be customer engagement. We want to engage our customers for both borrowers and investors. So as a technology-driven company, we're developing tools and services to build relationships with borrowers, not only during the loan, but also before and after the loan services, and to engage our potential customers as well. Our goal is for Yirendai to become one go-to place for online lending. And for investors, we have a big and excellent investor base now, and we are offering more services such as investor education, tools that connect their healthy lifestyle with healthy investment, and cross-selling other financial products and services. These two are our main focuses, but there are a lot to do, and we're super excited for the years to come.
There's a lot to do. Okay, well, on that note, we'll have to leave it there, Yihan. I really appreciate you coming on the show today.
Thank you very much.
Okay, see ya.
See ya.
I've been saying this for some time now. My partner Jason Jones has as well, that China is not just the largest market in the world. It clearly is that when it comes to this industry. But I would say it's also the most important. There's more innovation happening in China. There's more investor dollars in China than in any other country in the world. And I think if you're serious about this industry, you should be starting to pay attention to China. China is going to be an important player in the West over the coming decade. I think you're going to see more and more presence from China. And I think starting a relationship now with this fascinating country, I think would behoove everybody in the industry. So on that note, before I sign off, I want to give a quick plug to our next event for Lendit, which is actually Longdi Fintech 2017. It's coming up in China on July 15th and 16th in Shanghai. Details are on the Lendit website. Go to lendit.com and click on the China tab. You can find out all the details about that event. We expect to have close to 2,000 people. We're going to have lots and lots of Westerners coming. We also have the Lendit Executive Tour, which is a 7-day event. This year it's actually, we're expanding it a little bit. It's going to start in Macau, go to Hong Kong, Beijing and Shanghai, and it will culminate in the Longdi FinTech event. And if you're serious about China, I think you should be coming to one or both of those events. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.